Hey everyone, thank you for joining the Q2 24 GTA and Southern Ontario Retail Market Report update. I am going to be covering the activities that I'm finding in the retail market really throughout Southern Ontario and the GTA, and want to share with you some of the details and ways as you as investors can take advantage of the market and the opportunities coming up. So what we'll cover in this presentation is first, number one, we'll cover the GTA retail market activity, the sales and transactions that we've been seeing, sales volume, and what I'm seeing on the ground. I'll then shift focus towards assets within Southern Ontario specifically and how those transactions and sales volumes have occurred. And then I'll summarize it for you what this means to you and how you can implement that, whether you're a buyer or you're a seller in this market. So if we jump in, if we take a look at retail sales of sales volume of assets over 10,000 square feet, we actually saw a historic increase from last year, up about 442%. So that drove sales to about 274 million. Now, what I will say about this stats, and these are a little bit misleading in a sense if you just look at it in this snapshot period, is that Q2 last year was a historically low volume in terms of transaction. I think we did around $50 million worth of sales in the GTA alone, which was extremely small in comparison to right now. We're at around 274, which puts us really on the historical average and where we're starting to see over the last 8 quarters, where we seem to see we're building a trend line. If we take a look at the transaction volumes, they're actually up 186% also. So again, last year we saw only 7 deals completed in Q2 in comparison to this year about 20, which seems to be on average of what we've been seeing over the last several quarters. So it's going to be interesting how this is shaping up, where we're starting to see a pattern or in how the transactions are operating and how the market's operating, and we're starting to see some sort of stability going forward. If we take a look at the quarter-over-quarter numbers, this shares a little bit of a different picture, and this is what I shared. If we look at a quarter-over-quarter over the last year or so, roughly, we saw a decrease from Q1 about 21% in the amount of sales volume. So there was $350 million worth of deals done in Q1, and that was down down to roughly about 230 of what we saw this year, or this quarter. Now the interesting thing is that if you look at the chart over historically, Q4 obviously tends to be a big year because everybody's trying to get a lot of closings in by the year end. So we saw a huge spike, really the high spike that we don't, but it's trended down. If you look at the previous quarters before that, we saw a really anemic and slow market last year, where interest rates are really at their peak. There was no end in sight in terms of when they would start to decrease, and it made doing transactions a lot difficult. If you take a look at the number of deals that are actually complete, we're roughly about the same from what we did last quarter. There was 19 deals done. We did 20 this year. We're up 5% technically, but roughly you can say it's about flatline. So we're seeing on average for the GTA, if you're looking at assets over 10,000 square feet, you're going to see about 10 deals, 20 deals that are going to be available to transact really in any given quarter, as a kind of a rule of thumb. If we take a look at the Southern Ontario market on a year-over-year basis, we can start to see the similar sort of trend. Again, real big spike, up 31% from last year, which again was a slower year. They didn't do as poorly as the GTA did during that same period. They went from $209 million worth of transactions to 273, of which we saw really a strong increase. If we look at the transactions, again, similarly, same, about flat. We saw about 100 deals done last year into about 107 done this year. So what's interesting with these numbers, and this differentiates it, is just that this includes all assets, not just over 10,000. This is all size of assets. So you get a little bit more transaction volumes if you're looking at smaller deals, and that's what makes up the vast majority and bulk of this. If we look at the quarter-over-quarter numbers, again, starting to show a trend line of where the activity is and stabilizing. Again, we are slightly down from last quarter at 298 million last quarter. It's down about 8%. But if you look historically over the last 3 quarters, we were roughly about flat. We had a big spike in Q3, but overall we're starting to see a trend line. About $300 million worth of deals is what you're going to see, and how that equates out is roughly about 94 to 100 deals. We saw 94 deals completed in Q1 2024. That's up. Now we're up 14% from last quarter. So we had 107 this quarter. We had 94 last, so we're starting to see an increase. And the way the chart shows is that there's peaks and valleys in terms of the activity. Usually that's dictated by what's really available in the market. The market has a strong absorption rate if there's quality assets available. So the more that's available, the more transactions you'll see. And typically we're starting to see a trend line of, you're going to see about 100 deals, you can say, each and every quarter that's going to transact on a retail basis. So what this means to you if you are a seller. So number one, if you're considering selling, we have a low, even though there's a lot of transactions that we're starting to see an increase in, historically there's a low volume of deals that are actually available and low volume of even quality assets. What you're finding is that if it's a quality asset, great tenancy, great location, great mix, it ends up selling quite quickly, or you get a lot of offers or a lot of bids on the asset, and it moves quite quickly. So if that's the type of property that you own and you're considering it, these are advantages that you can take advantage of right now. And then also, obviously, we're in an improving interest rate environment. The Bank of Canada just cut rates twice. They are giving forward guidance that we can expect to see lower rates over the next year or so, year and a half. So we're going into a lower interest rate environment, which conversely affects cap rates and improves valuations. This also allows buyers to make sense of deals a lot more easily, as well as bring a lot of buyers that were on the sidelines back into the market because of their affordability and their ability to close on transactions and to make capital or cash flows work in a lower environment. So bodes well over the next 18 months. We're going to be, I see the trend line continuing in terms of the number of transactions. It can only help. The one caveat I'll mention is that if the Bank of Canada is reducing interest rate, then our economy isn't doing as well, and that may affect tenancies and vacancies. But right now we're operating GTA. It's close to 98, 99%. Outside GTA, maybe we're in the high 90s. So there is still room that even if you were to lose some tenancy on a market basis, we're still quite high. So cash flows are doing quite well for a lot of owners. If you are a buyer, what I would suggest is consider secondary and tertiary markets. The reason why is that you're going to get a lot more activity and opportunities there, where there's slightly less activity than what you would get in the GTA. Now, by all means, if you're looking for more core assets or core markets that are going to be a lot more stable long term, of course GTA will provide it. But if you're looking for value add opportunities or places where you can see some growth or some acts, so you can take a sort of an active management role, you're going to be able to find those opportunities there. And then also I would suggest, this ties into the same thing in terms of searching for yield. As you get outside the GTA into these secondary tertiary markets, you can start to see a lot better cap rates. As a result, with the higher interest rates, I know they are decreasing, but with the higher interest rate, higher cap rate, you'll be able to manage a lot of those cash flows and that return in the short-term basis. So we're starting to see a lot more activities there. There are some more vacancies, like I mentioned, in those secondary and tertiary markets. So there's an opportunity to fill vacancies, increase rents, and improve the overall asset value by doing those in those markets. So that's what I'm seeing from a lot of the deals we're looking at, rent rolls, so that we're working with clients on, or buyers that are actively looking in the space where the opportunity lies. What I want to share with you, so this concludes the end of the presentation. What I'm offering for everyone is, whenever you're ready, the 3 ways I can help you is, A, if you're looking at a pinpoint price analysis for your property, this way I'll give you an accurate value of what your property is worth and give you an idea where it places in the market. I can also provide what's called an asset optimization analysis. I've been doing this a lot for clients now, where I will look at ways in which they can maximize the value of their assets, whether that's increased rents, vacancies, repositioning tenants, looking at rezoning or opportunities where you can add zoning to attract other tenants, and a myriad of other strategies and where they can add value and increase their investment. So we'll provide an analysis, a formal analysis for you if you're interested, and give you some detailed ways in which you can approach it. And then also, if you are an owner of a retail asset, commercial plaza, or retail building anywhere within Southern Ontario GTA, we have a ton of buyers actively looking at purchasing. We may be able to provide you with an off-market offer on it in what we call our silent market. So if that's something you're interested in receiving or having a conversation on, please reach out to me. My contact information is on the page here or in the description. And until next time, I look forward to keep you guys in the loop and going forward there. So thanks a lot.